Good morning and welcome to the Killik and Co Market Update. We've experienced some weakness in some markets this week. Here's a chart for the S&P 500 over the last year, and you can see that little decline at the end there. Some of this may be profit-taking after a very strong run, but one thing that has caused some nervousness this week was an auction of US government bonds, also known as treasuries, that experienced less demand than expected. This lack of demand for newly issued treasuries caused a fall in the prices of existing treasuries and therefore a corresponding rise in their yields. On this chart, you can see how US Treasury yields have risen in recent weeks. The pink line shows 2-year treasuries, the green line shows 5-year treasuries, and the black line shows 10-year treasuries. The yields on all three of them have risen. Treasury yields are used as a benchmark for lots of other types of lending across the economy. So when Treasury yields rise, other types of lending can become more costly, and that can cause a slowing in the rate of economic growth. This week, the FTSE Russell Group has indicated which companies are likely to rise and fall in the next FTSE 100 quarterly reshuffle. Vistry Group and Darktrace are expected to join the FTSE 100. Vistry is a house builder that focuses on social housing, and it does a lot of work with local authorities and housing associations. For that reason, it hasn't been hit by rising interest rates in the way that other house builders have. Darktrace is a cybersecurity business that has been bid for by a US private equity company, so it will be leaving the UK market when the deal goes through. The companies being dropped from the FTSE 100 are likely to be St James's Place and Ocado. St James's Place has experienced a significant fall in its share price after a new regulation forced it to reduce its fees, and Ocado is still struggling to become profitable. On the subject of companies leaving the UK market, it has been confirmed this week that International Distribution Services, which is the company that owns Royal Mail, has accepted a bid from a Czech billionaire. So this will raise concerns about the number of companies still trading on the UK market, which continues to decline. Back in the 60s, this was over 4,000. By the 90s, it had declined to less than 3,000. And by the end of 2022, it was only just over 1,000. And finally, the UK government has announced it has further reduced its stake in NatWest, formerly known as RBS. The UK government bailed out the bank in 2008 during the financial crisis, and at its peak, the government owned around 84% of the bank. Here's the 20-year chart. You can see the shares are far from recovering to their pre-financial crisis level. If we reduce the timescale on the chart to 10 years, you can see the more recent movements in the share price a bit more clearly. There had been some talk of the shares being offered to retail investors at a discount, but this has now been put on hold due to the upcoming general election, and the government has continued to sell down its stake. At the end of last year, the government still owned around 38%, and that has now reduced to less than 23%. The government is continuing to sell down its stake, and these ongoing sales will put downward pressure on the share price. Moving on to have a look at next week, it's looking very quiet on the calendar, with not a single company under our coverage scheduled to report. Have a great weekend, and we look forward to seeing you next week.